Zone Trader Pro, the specifics for this particular strategy. You've already gone through the generics for all the ASBs, and this is now specific. So there's two different types of trades here. We've got the reversals where we come to test, in this case, a resistance, and then it reverses back round and we get the trade. Then we've got another type of trade where we actually push through. So it's a continuation trade and goes down to the next zone. So those are the two different types of trades that we put there. And a lot of the beta testing has actually came about to try and find the best way to use these. So when we go through the optimization class after this, we will be looking at optimizing on separate chart sets, one for reversals, one for continuations, because optimizing separately actually gives us a better win rate. But we'll go through that in the optimization class. So let's go through each of these in turn to describe, explain what they're for. So this is a reversal. Parameters for that particular type of trade. So number one is the mode. So you can actually, when you're optimizing, it's long and short as default, but you can actually just optimize for longs or shorts, depending on how that optimization goes. You might just decide to have shorts running. Number two is the entry mode. So we've got two entry modes here. We've got an aggressive. So everything with the Zone Trader Pro is on Fibonacci Extensions. So we have an aggressive entry at 23.6 fib. So if we get the zone and when we go through the optimizations, I'll just point those out a little bit. But conservative is a slightly later trade, is 38.2 fib. Number three is the market order if surpassed. So if you get a really quick move, if you check this box, if the stop market order is not taken in, it will take a market order, because obviously sometimes those moves are really fast when it pushes through. This is a reversal parameter, so when it bounces off, sometimes you get a really fast reaction at support or resistance. And again, you will be able to, when we go through that optimization process, you'll see whether that's a hindrance or a help depending on your instrument and time frame there. Allow entry from one non-native zone. Remember, Zone Trader Pro is about confluence. So we're looking for confluences of more than one support or resistance zone together. But we don't necessarily use it on reversals. But when we come to the continuation, we do allow entry from one non-native time zone. So if you're on a 5 minute and you've just got a 15 minute up above and it pushes through, then we could use that. That's that sort of situation where it's a higher time frame, but there's only one of them. So there isn't a mixture of 15 and 30 together. So this one's very important. Number 5 here, max bars after signal 2. So what we're looking for is to hit a resistance, for example, come back down, and within 2, take us into the trade. If not, it will cancel. Again, you can change that when you're optimizing. So minimum, number 6 is the minimum required heat map. So in this instance, it's 4, because remember, a reversal is going one way and it comes back the other way. So it may not be all 6, and you've got to be a little bit pragmatic with this in that 4 or 5 out of 6 may be the way to go, or you could go 6 out of 6. And one of the examples I'll show you in a minute is an example where that would be the case. Number 7 is the minimum risk. So that's the minimum size of a zone. Sometimes if the zone's really small, say 10 ticks, it will just hang around that zone for quite a while and take you in and out of trades. So the minimum risk, so the minimum size of those combined zones is very important, that it's not too thin, otherwise we'll just get stopped out really easy. That's number 7. Then number 8 is the max risk. In this case, it's 30 ticks. So we've got a window between 20 and 30 ticks, which is when this has been optimized, is the right sort of situation. So the number 9 is the minimum risk reward. So it's 161%. So from stop to entry is 100, and then it extends 161% before the next zone. That's the minimum risk reward at number 9. Again, these are all changeable when we're optimizing. So number 10 is the minimum fib anchor in ticks. So it's not the same as the minimum size, because where we use the stops for the fib for for the extensions is on reversals in particular is the actual the pivot. So if the pivot's in the middle of that zone, that's where that fib is through. So it's different to the size of the zone. It's from where the pivot is to make those measurements. So that minimum fib anchor 20 ticks is also very important as well. Number 11 is the entry quantity, self-explanatory. Number 12, exit at next zone quantity. So basically we're saying if we're entering on one, if it hits the next zone, take the trade off in this situation. Okay. Now, if there isn't another zone and it's quite a long way away, we have the max fib percentage set at 350 here at number 13. So if we go 350%, and there's still no sign of a zone to take our profit, that's where that profit will be taken on there. And again, I'll show you an example of that. The number 14, exit cross quantity is 0 in this case, and we use 2 EMAs for cross. And again, we're going to go through and make some examples of that. So this really comes into effect when you've got multiple contracts. When you're in one contract, it's a lot easier just to go to exit at the next zone and then put a max fib percentage in there. Minimum fib 100. This is to do with the exit at exit cross quantity. So if you've only moved 50% on the move and you get a cross, it won't take it out. It'll just revert to the max fib there. So initial stop loss offset number 16 is 2. It's a basic standard one. You've got to be careful to be at number 1 because that could be a little too close. Number 17, use break-even stop loss update. Trigger, in this case, number 18 is 100%. So when it goes through 100%, we're making it risk-free at 2 ticks. Again, like a lot of the other ASPs, we look for that sweet spot to where it starts to go and we can make it risk-free. This can be changed in some instances. We've got it at 160 or even 200% there, but again, it depends on the optimization. Number 19, use next zone stop loss update. This is unchecked. Okay, this is where it hits the next support or resistance zone, and then we start to adjust the stop at that point. We don't tend to use that too often right now, but it's something that we can look at in future classes. Number 20 this is where we use the stop loss updates. So use fib stop loss update 1. So when it goes through, in this case, number 21, 160%, move the stop to 100%. Then the next one is stop loss update number 2. When it goes through 227%, adjust it to 160. And then the last one at number 23 is 261% to 200. It really depends on how fast and which instrument you're trading. So these are adjustable because you've got to find out you've got to look at the groove when you're optimizing and where those stop loss adjusts needs to be. So this is an example of a reversal. So it looks like it just keeps going down. But what happens is we push through the zone where my cursor is here. It comes back up to test. Then it reverses and takes the trade. And that's what we're really looking at here. They're the better ones where we push through, we pull back, we find resistance now, which was support, and then it goes. Okay, so we see the entry quantity is 1, exit the next zone quantity is 1, the max fib is 500. You'll notice here, this is the end of the session. On the standard settings that we use for all ASPs, we have the option to exit on session close. You can see in this situation, I've got it unchecked. So it continued all the way through until it hit that 500% max fib and took the profit. Okay. Sometimes carrying over can be risky, but remember, you've got stop loss adjusts there as well. You know, futures do gap after the close, not a lot. So, you know, it's about looking at that past data over the 90 days and actually letting it through that session close. If it wins more times than not, then it's obviously a good situation where you can let it carry through. But other optimizations on other timeframes, different instruments will give you different results. So again, this is another one where we push through, we pull back, it reverses, and then we go again. In this situation, though, we have multiple contracts. We've got 5 contracts here. And what we've done is exit at next zone is 3. So we can see at this point here, it hit the next support zone. It took 3 of those contracts off. Exit at cross quantity is 2, but it hit the session close. And for MCL on the 3-minute, in this situation, we've optimized and said you need to close at session close. So that's what it's done. It didn't cross. So we got the session close there, and it took the profit. So the next one is a continuation trade where it pushes through and just keeps going. Again, some of these things are the same, so we'll just go through them really quickly. Number 24 is the long or short. In this case, it's long and short. 25 is the entry mode, aggressive or conservative. 26 is use market order if surpassed, that's checked. Now, number 27, allow entry from one non-native zone, is checked in this case because this works very, very well when it pushes through a higher time frame in just a single time frame and not a confluence. It does work very well. So number 28, max bars after signal, in this case is 5 again. That's probably the maximum you want to be. You need to be there 2 or 3. Number 29 is the minimum required heat map. This is 6 out of 6. It's got to be 6 out of 6 for me. That is, but again, optimization will prove that. Number 30, number 31 is the minimum and the max risk. These pretty much the same. 32 is the minimum risk to reward. Fib anchor minimum, number 33. Quantities and exit at next zone quantities and max fib. It's all the same from that point. It's just a different type of trade. And in this situation, we can see we've used a break even stop loss at 300%. Okay, so we want it to run considerably before we start to make that risk free, because when they push through into that fresh air, they usually go quite quickly. So this is an example of that push through of one single. So this is I think it's on the 5-minute, and this is a 15-minute zone right here. And it pushes through this zone and just continues to go. And again, what we've done, highlighted this here, is use market order if surpassed and allow entry from one non-native zone. So it comes down, all the way down, clear air, pushes through, all 6 time frames are green, take us in the trade, and it exits at the next guardian zone. Very, very simple. So in this situation, here, we have a confluence of zones. So we've got 15 and 30 minutes together. We get the push through. All 6 time frames are green. We've got lots of fresh air here. So exit at next zone is 1. There's no zone. It hits the max fib at 350. You can see the 350 extension that I've done here, and that's when it takes the profit. The fib extension, the tool is worked out 1 tick below the zone, 1 tick above the zone, and that gives us the 350%, and that's where it takes it out. Again, you don't need to do those drawings. You just need to understand where that logic comes from, if you like. And one of those things when you're optimizing is you may just need to draw and see what that average move is. I mean, 350, it could have kept going to 500 here, but when you're optimizing over 90 days, you'll see that 350 actually is the optimum for that particular time frame on that instrument. This is another example here where we push through. In this case, we get a market sell. So if it's surpassed, we say, yes, take the trade from a market point of view. We can see that entry quantity is 5, exit at next zone is 3, hits that next zone, takes the other 3 off. and then max fib is 500. It doesn't reach that. So exit quantity on the cross is 2. Where my cursor is here, you can see the cross on this candle here. So confirm it on the next one. That candle closes at this point, and then as soon as the next candle opens, we get the market buy at the exit cross, and it takes the rest of the contracts off. So what we're looking for with this cross is runners, really, in reality. It managed to get through this support, but the next support was just way too much and it came back up again. But remember, we've got those stop loss adjusts and we've got that exit on cross quantity as well. So these are some of the other modules within there. So time frame configurations for the Guardian zones is important. In this particular situation, we see native is disabled. So say we're on 5 minute, when we've done the optimization, it's best to keep that off and just use the 15 and 30 minutes are enabled. The heat map parameters, for example, is day trading or scalping. In this situation, is day trading. One of the things I want to really highlight here is show entry stripes on startup. So you'll saw those vertical blue, green or red stripes when we got those orders. To enable that on startup, that allows you to backtest a lot easier so you can see which candle was the order candle. So that's the Zone Trader Pro. The next lesson, we're going to go through that in a little bit more detail, and we'll actually do a masterclass in optimization.